Thank you, Sean and Colin. I only met these guys a short time ago. I'm going to say it was about 4 or 5 months ago. Somehow they got me to invest in one of their pitches. And next thing you know, they said, well, gee, we got a conference on down in Jekyll Island. And of course, I'm thinking, I don't do conferences anymore. But, because I'm theoretically retired, okay? But then I thought, Jekyll Island, boy, that's an interesting kind of place. It's a lot of symbolism to Jekyll Island because of this book that you have in front of you, which is the history of how the Fed was started down here. And kind of makes you sick in a way to see, you know, it was called the millionaire's place, right? A million was a lot of money back in those days. And you see all these big homes down here and all these big shots coming up with something that they created called the Federal Reserve Bank. And of course, for the last, whatever, probably 17 years, I've kind of railed against the Federal Reserve Bank because I think the printing of money and the creation of debt will all ultimately work against us, but we never know when exactly it's going to work against us. So it was very interesting for me to come down here. One of the data points that I learned yesterday, the Crane house cost $110,000 to build back in whenever, the early 1900s. I gathered that this 4-story building cost all of $40,000 to build. And you should just let yourself think about those numbers and what it would cost today to build the same facility. And it tells you everything you need to know about money, paper money. In fact, if, let's say, we imagine that somebody back in the early 1900s buried $10,000 of cash, or the equivalent in gold at the time, what would the cash be worth, presuming it survived? It'd be worth $10,000. And what would the gold be worth if it survived? What was the price of gold back then? I mean, it could have been as little as $6 or $10 an ounce, so it'd be up by 13,000% at $1,300 per. I mean, it would be just a huge, huge relative gain. And every time I see a discovery that somebody finds some gold that was buried, I always think, what if it would have been currency versus the gold? And the difference is stunning. And a lot of us don't get it because we think so short term. Well, gold's not a good investment. It went down from, 2011 to 2016. I don't want to touch it. Meanwhile, of course, it's up a little now in the last couple of years. And we shouldn't be guided by very short-term thinking. I also agreed to make a presentation because I care very much for sort of small enterprise capital. Because as you all know, it's very difficult for smaller companies to raise capital. You need people to champion your stock. And for most part, the major financial organizations won't deal with small companies because small companies equal small fees. And I know it's not about the fee. Sorry, no, it is about the fee. They just won't go down into that area, so you need young, aggressive, smart people to take it upon themselves to introduce these things to you as potential investors. I've always been a huge believer in small things because small things provide a tremendous outsized opportunity. Like tremendous outsized opportunity. I could go back to 2000 when I really got interested in gold. Not that I hadn't before, but I realized going into 2000 the NASDAQ was going to crash, which I wrote about, and it crashed, and I was already positioning myself. And I would buy these smaller companies, and one of the smaller companies, by the way, was a company called Gold Corp. That was a small company in 2000. It was probably less than 300 or 400 million market cap. Had not even developed the Red Lake mine, hadn't brought it into production. I'll talk a little more about Gold Corp later, but and then when I compare it to what it accomplished versus Barrick, the big guy, or Newmont, the big guy, like it was hands down a huge, probably outperformed those things by 15 times. 15 times. Where do you get that? And that's what we're here to find, things that outperform things by significant factors. So That's another reason that I wanted to come down here, to encourage all of you to think about the opportunities and what it might present to you versus other things. I just want to give you a little bit of my background so that you have some idea of why I might have ended up doing what I did. I'm a chartered accountant now, called CPA in Canada. I worked for Merrill Lynch as a research analyst for a year and a half, and then I joined a company called Lowen and Dutchie McCutcheon, which was an institutional stock brokerage firm where I was a salesperson, an institutional salesperson. When did I start Sprott Securities? That was probably in something like 1980. 81? Who's that? Oh, it's my wife back there. Okay. Now that I see my wife back there, I remember the first time I gave a public speech, okay, and I was concerned that people couldn't hear me. I said, can everybody hear me? And some guy in the back of the room says, I can't hear you. And my wife was at the front, says, fine, I'll trade seats with you. Now she just sits at the back, okay? Anyway, so I started Sprott Securities in 01. And there were all of 3 people in Sprott Securities at the time. Took a little while, quite a few years to get it going. I didn't do the first underwriting until about 1987, I think it was. We did our first underwriting. By the 1990s, and I used to buy an Eskimo carving every time we did an underwriting, and I don't know how many of you have ever been to our offices before, but we have all these Eskimo carvings there, which they're all gone now because I've left. But anyway, sometime in the 90s, we were doing like 50 underwritings a year of various things, not just precious metals, but many things. I started the asset management business in, what year was that now? 2001. Right, she's good, isn't she? Something like that. And I started the asset management business because I'd had people who had co-invested with me where I was the salesperson. And it just kept getting bigger and bigger, and maybe I had like 150 or 200 individual people that I was running money for. You can imagine every time we bought a stock, we had to divvy it up amongst 200 different accounts and all these contracts going out. And finally we said, well, let's just start a mutual fund. So we started a mutual fund, and then that led to hedge funds and lots of other funds. You know, as you know, Sprott Inc. and Sprott Asset Management became very large with over 10 billion of assets. They recently are buying Central Fund. The Sprott Gold Bullion Fund is buying the Central Fund with 3 or 4 billion of assets. I'm not involved with the running of Sprott Inc. anymore. I used to be the chairman. I'm not the chairman. I'm a shareholder, and of course I'm interested. So that takes me to where I am today. As you know, I'm retired, so I don't really have much to do, okay? Other than stay abreast of everything that's going on in the market so I don't have to sound stupid up here. And I literally just came from an interview this morning that I do for Sprott Money every week. And it forces me to kind of know what's going on so I don't sound totally stupid. So I do stay abreast of things. I've been a very successful investor, and not just in the precious metals that have been very good to me. I'll just give you some examples. There was a company called Bowflex that I think I bought the stock for $1. I think it became called Direct Focus, and it went to $30. So there's a 30-bagger. I own Taser International, which I bought very inexpensively. I forget what the price was. Maybe it was $5 a share. It was a U.S. company, interestingly a U.S. company, not listed in Canada. And that went to about 120. So that was a 24-bagger. Now, most of this was for our clients of mine, okay, who got that, because typically I couldn't buy lots of things, because you always have to buy for the client first and sell for the client first. As a big investor in the uraniums in 03, 04, when they all went crazy. Of course, I was very, very, very involved in gold stocks in 2000, right at the bottom of the precious metals market. I would buy, I think I bought probably something like 10% of El Dorado for like maybe $2 million. And of course, I don't know what it's worth today, but it's in the billions, right? And of course, unfortunately, I don't have the 10% anymore. my best years ever as a manager of hedge funds was '01 and '02. Interestingly, when the market was getting the crap kicked out of it, we were making a fortune on both the long precious metals, short the market. And I can tell you that we covered shorts of Citigroup, GM, Fannie, and Ford all under $2. $2. And people forget that Citi went to $2. $2 was as I'm broke, sorry, okay? Then they got bailed out by the Federal Reserve. Came along and bailed everybody out. But you know, every bank was broke then, and we should never forget that. They were broke. And now we have all this support that comes into the banking system, more so than I was going to say the economic system. I mean, it's helped the economy, in my mind, to tread water. But the biggest effort was to save the banks. Take interest rates down. All assets appreciate in the declining interest rate market. And of course, they were big owners of assets. Of course, it didn't hurt that the Financial Accounting Standards Board at the same time said to the banks, well, you don't have to mark to market anymore. Excuse me, you don't have to mark to market? Which let them, it's a get out of jail free card at the time. And it's probably still operative. So God knows when you read a bank balance sheet what's really true or not true. So anyway, that was a great, great time for me, the bear markets, both in the NASDAQ bear, which we called to a T. In fact, I wrote an article that day saying, the market is exceedingly speculative. Do not be a part of it. I think it was written on March 7th, 2000. Top of the market. And of course, that's when all the dot-coms and all that stuff were going crazy, that you paid multiples of eyeballs or something like that, you know, like the hits they had or something, and you're supposed to pay some huge price based on all that stuff. It was ridiculous, okay? I hate to break it to some people, but I kind of think we have a little reminiscent thing going on with these initial coin offerings, these cryptocurrencies. I mean, I can't believe there's a need for 1,000 different coin offerings. I don't get it. Why do we need? Bad enough that we have 190 different currencies that are all crap. Now we're going to throw on top of it 1,000 different coins? I don't know. I don't get it. And it's funny when sometimes things don't make sense. It's because they don't make sense. And you got to trust your own judgment that they don't make sense. Anyway, I can't believe that we need that many coin offerings, okay? And yes, there's reasons for the blockchain to be successful, but I think it's gone way beyond that. And by the way, the fact that cryptocurrencies have become successful, in my mind, is a statement about paper currencies. Every one of those people is turning their back on paper currencies, okay? That's what they're doing, make no mistake. Just as us gold and silver investors are turning their backs on the paper currency. So we just have a larger pool of people who are turning their back on paper currencies. And maybe someday we'll get together on it, you know, if blockchain, if the cryptocurrencies would take a bit of a tumble here, that maybe the people would then find that their only choice is gold and silver and other precious metals. So where are we now? By the way, they told me I got to speak for an hour. That's a long time, you know? I don't know if I've spoken for an hour in the last 20 years. But anyway, where are we now? Well, the first thing that I would encourage everyone here to think about is that the TSXVenture was at about an index of 480 in January of 16. It's almost 800 today and showing a very, very nice uptrend. So in the last 2 years, we have had a 60% rally in stocks, notwithstanding stocks coming down. And even last year, 16, from January to, I don't know, I think it was July, I mean, the indices, the gold indices went up something like 150%. 150, where do you get this? Where do you get 150, man? I was reading an article where the guy was saying, and these 3 silver stocks have all performed Amazon in the last 2 years. And it was Exelon and Impact Silver and something else, I forget what it was. And sometimes we don't sort of sit back and say, geez, yeah, that's right. I did buy Exelon 50 cents, didn't I? Where is it now? $2. Oh, yeah, that's 300%. Okay. Those things are happening. They're happening in the market. And you have to recognize that I think we're in a bull market for metals. And I don't think it's just precious metals either. It's probably actually more base metals. That I'm not a fan of base metals. Okay, I'm not, even though I have some investments that, share base metals, because quite often when you have silver, you end up with nickel and lead. With zinc and lead. But I don't typically go out and look for base metal plays. I'd much rather stick with precious metals. But when you look at the price, I think cobalt's at $25 a pound, which I think is, doubled in a year or so. Might be a record high. Nickel went up 10% last week. Zinc's at $1.50, close to. Lead's at $1.20. Like, you're seeing a lot of progress being made on the price front. And of course, don't ever forget, from an investment point of view, price is the most important thing. It's the most important thing. Because you can increase your output by 20%, but believe me, your profit may only rise by 20 or 40%. You got a 20% price increase? Wow, you could double your profit. How many guys make 20% margin? Something's trading for $1. Let's say lead's trading at $1. It costs you 80 cents to make it. You're making 20 cents. It goes to $1.20. You doubled your profit. Doubled. Price is way more important than production. So that's the thing you got to keep your mind on at all times. So I would say that we seem to be in a pretty interesting environment for, I don't know, do I call it speculation? I hate using the word speculation, okay? I really do. But some things are speculative, and some things are reasoned investments. I like to think that you make a reasoned investment decision that some guy's going to call a speculation, but you say, well, the downside's kind of limited here, and the upside's just staggering. In fact, one of the things that you look for is an opportunity where you can get multiples on your money, but you're not taking as much risk of losing 100%. So, for example, if you can see a situation where I could make 10 times of my money, but I'm the worst I'm going to do is lose 50%. I mean, that's a good bet, right? If you've done the thinking, say, well, I think the 10 bagger is going to work here, or the 50 bagger, or the 100 bagger. There's been so many stocks that have gone up so much. I had it in the end of 16. I tried to sell a position that I owned that I probably paid a couple of million for, and I wanted to sell it for tax loss purposes. And I was prepared to sell it to my brother for $1, just to take the tax loss. At the time, the compliance department of Sprott Inc. wouldn't let me do it. So I was forced to keep it, okay? Well, it's worth $6 million today, okay? The stock's up by 30 times in that time period. And it was worth $8 million 2 weeks ago. But those things happen now. Where if you can hold on to something, you're well intended, you're expecting an outcome, you're not into the minutia of what happens week to week or month to month, that you have a good investment, that when things start to play out, it's all going to come together. And I can give you examples of it. Well, one that I was going to talk about today, but I will. I mean, I'm involved in a company called Exelon that I probably own partially diluted 25% of the company. And I'd owned it before, but the company came out and said, well, when we're dewatering the mine, okay, water was a huge problem. They used to grout it. And they said, we're going to dewater the mine so we get to mine in dry mining conditions. Well, and then they said, and as a result of this, we're going to double our production and cut our costs in half. Well, being the good accountant that I can calculate that, 2 times this and 2 times that, that's 4 times better. And in fact, it's more than that, because this is all at the margin, right? It could be 1,000% better, or 2,000 or 5,000% better. That kind of analysis. And they haven't quite gotten there yet, but they've dried the mine out. Last quarter he produced 200 tons a day, which is nothing. and they hope to go to 300 this quarter. Well, 300, that's 50% more. You know what? All profit. Pretty well all profit. Doesn't cost much more. In fact, his costs are going down. It's even more profit. Now, I don't know what his profit's going to be, but I've imagined that, and what's his market cap? I think his market cap is, what I think it was, I don't know. I don't want to give you the wrong number, but I've imagined that the guy could maybe make $40 million and his market cap was like 120 or something. I mean, I stand to be corrected on that. So then I like stuff like that. There's real money coming in. It's going to happen soon. Like we already saw it this last quarter, and now we'll start to see it this quarter, and maybe more the next quarter. I can go back and talk about Kirkland Lake. Why did I buy Kirkland Lake down at $4 and $5? Because they said in their resource statement that as we go lower in the mine, the grade improves, and maybe then they were producing at 13 grams. And they said as we get down here, it goes to 20 grams or 22 grams. I forget the exact number. But 13 to 20, first of all, that's 50% more revenue, all hopefully profit. All profit. Profit. We like profits. And ultimately, that's what it's all about, right? It's all about what profit can a company make. And as you know, Kirkland's been pretty hot here in the sense that amongst the intermediates, it's tripled in the last little while, and I will talk more about it later. Anyway, so I'm looking for multi-baggers, okay? And everyone can spend the time to look for a multi-bagger. I mean, take your time, man. There's no rush. Go find a multi-bagger. You don't buy stocks that go up 20%. I would never listen to a guy saying my stock's going to go up 20%. In fact, it pisses me off when mining companies come in and say, well, we got a 15% IRR. What? 15% IRR? You want me to look at it? Are you mad? Knowing the problems you're going to have getting it into production, and when you get it into production, some country's going to try to steal it anyway? Like, what the hell? You got to have something bigger than that for all the risk we take as investors in mining companies. One of the other very difficult things for people to do is when they have a winner is to hold on. And how would I convince people to hold on? You look at what you have every day and say, how much more can this still go up? Don't look at what it went up by. How much more can it go up by? And do I have better alternatives? Do I have better alternatives? And I do that. I own some stocks that I've said recently I'm prepared to sell them. Why am I prepared to sell them? Because I got something better I want to buy. Okay? I want dough to put in other things because I think I have stocks that can go up by, multiples of 10 times versus something that maybe is going to produce some gold in Canada and it could go up by 5 times. But I'd much rather take the 10 and 20 bagger than the 5 bagger. And that's what you do. You assess your opportunities every day and make the appropriate decision and try not to get scared out of it. I don't believe in technical analysis, okay? I think it's all bullshit. I mean, these guys, I'm involved in some hot stocks lately, right? Novo and Garibaldi. And I keep hearing these goddamn technical guys talking about it. I think, man, you have no friggin' idea what you're talking about. You might have a world-class discovery and you're looking at the friggin' technicals. Are you mad, man? It's just crazy stuff. Now, one of the other things that I'm a believer in is you emphasize reality over conservatism, okay? If you think something, just don't say, well, I'm going to cut it by 50%, okay, just to be conservative. By the way, the 50% you cut it by is your profit. That's your profit, man. You can't be cutting it by 50%. That's all on the top line, right? And there's way too many people that want to be conservative, and it's the wrong thing to do. And I had an example of that recently. It was at Kirkland Lake when we took over Newmarket Gold, of which I was a very large shareholder, 17% shareholder of Newmarket and 10% shareholder of Kirkland, or maybe less, maybe 8% of Kirkland. And in the process, I ended up becoming a 10% shareholder of Kirkland. And then I remember we had a board meeting this January of this year, and the guys from Australia come up and said, well, we think we're going to produce 140 to 145,000 ounces this year, down from 150 the year before. And of course, I've been looking at these drill results where you got triple-digit grams over 5 and 10 meters. And your production's going to go down? You got to be sandbagging us. This is right in the board. You're sandbagging us. That's impossible. Anyway, we go down to see them, I think in late April. We go to Australia. And the first day, their estimate was still 140 to 145,000 ounces. They'd produced 46 in the first quarter. Okay, 4 times 46. Okay, we all know what that works out. That's 184,000 annualized, okay? 184. And you're using 140 to 145. You sandbagger. The hell are you doing to us here? What was your production in April? 26,000 ounces. That's 300,000 annualized. What are you using 140 to 145 for? This is ridiculous. Next day, they were 190 to 200, okay? Still conservative. Still conservative. And that CEO's not there anymore. Okay? You know why he's not there? Because he didn't know what the hell was going on. He either didn't know or he wouldn't tell us. And we need, as investors, you need to know stuff, okay? We don't need your goddamn conservative estimates and, oh, gee, we estimated 140 and we did 190. Give me a bonus? Like it was a joke. Anyway, he's not there. While I'm on this, because I was going to tell you a little story about Kirkland / Fosterville, because we have announced some spectacular ore intersections, okay? Very few people get it. You know what? It's all out there for every individual here to see those results, okay? They're all been published. They're crazy, off the chart spectacular. Crazy. In fact, somebody puts out the top 10 holes for the year, okay? And we have the top hole for the year. I forget what it is. It could be 4,000 grams over 5 meters or something. And I said to our IR guy, I said, well, and because most companies can only put in one hole, your best hole. I said, well, let's put the rest of our holes in and see what we'd have here, okay? If we're allowed to put all our holes in. Well, if we put all our holes in at Fosterville, we'd have 7 of the top 10 holes in the world. 7 of the top 10, all in one place. One place, okay. So we announced, let's say 3 or 4 months ago. No, probably July. No, it had to be July or August. July or August, maybe August. We put out a 43-101 for Fosterville, the new drilling. And we said we have added something like 526,000 ounces of 59-gram gold, okay? That's pretty good stuff by that. It's almost 2 ounces. And when I was down there the last time, I said, well, I know you've announced the reserves. What were the resources? We don't know. Well, okay. What was the cut? How much was the cut? We don't know. Oh, okay. 2 days later, they published the 43-101 with both numbers in it. Okay? They publish it, their publication. Well, the resources were about 276,000 at like 80 grams. And the cut was by 1/3. So in other words, the 2-ounce stuff was 3 ounces in the drilling. 3 ounces, okay? And while I'm here, I want to tell you, I've been involved with cuts before, cuts with high-grade ore bodies. And the one example I have is Gold Corp back in 2000, when the Red Lake ore body, they published their annual report. I'm reading it. Nobody reads annual reports anymore. But back in those days, you had to read the annual reports, okay? Because that's all you had. And luckily, Rob McEwen said, the cut grade is 1.2 ounces per ton at Red Lake, but the uncut grade is 2.1. Well, being the good chartered accountant that I am, the difference between 1.2 and 2.1 is a friggin' lifetime of investing. It's a lifetime of investing, okay, to know the difference, because it's all profit. It's all. Let's imagine that his cost was 0.9 of an ounce and he produced at 1.2. So he's got 0.3 is his profit, okay? You go to 2.1 and now you got 1.2 ounces of profit. You quadrupled your profit. It was important to know what the real grade was going to be. It was important to know. So I go and visit Rob McEwen and his geologist and whatever, and I realize, man, it's going to be the uncut grade. It's going to be the uncut grade, and you know what? The grade came in at 2.2, not 2.1. And of course, you all know what happened to Gold Corp. It was right there for everyone to deal with, okay? Everyone in this room could have done that? Okay. So I have a history with high-grade cutting. And I know in the case of Fosterville in this new zone, they do 2-meter intersections, and I don't know if there's any geologists here, but we had roughly 300 2-meter intersections that they assayed, and 100 of them were cut, okay? Now, I find when you cut 100 to 300, that's not anomalous anymore. That's statistically significant. And so I'm kind of thinking it might be 3 ounces, not 2. That's just me, okay? I'm thinking. I don't know that. Nobody down there will ever say, oh yeah, it's probably 3, because you know why? They're going to be conservative. Good, you be conservative, okay? I'm an investor, God damn it. I want to know what it's going to be. But I just want to give you a sense of it, okay? So let's say we find 500,000 plus 250, or we found, 750, okay, at 2 ounces. But now it's 3 ounces. Well, excuse me, we just went to 1.2 million ounces from 800, call it, okay? Because it went up by 50%. Now we found 1.2 million ounces in 6 friggin' months. 6 months. 6! Remember, we were going to produce 140 a year at the start of the year. We just found 1.5 million in 6 months. We found 10 years of production in 6 months at one mine. Okay. Now, let's imagine we get into the mine, okay, which we're not into. We're partially into it. We do 2,000 tons a day that we mine. Let's imagine it all comes from that zone and it's 3 ounces, okay? This is just a number thing, okay? That's 6,000 ounces a day. 2,000 times 3 ounces, 6,000 ounces a day. 6,000 ounces a day times 365 days is 2 million ounces. 2 million. 2 million? At a million ounces, we make more than Barrick. Okay, I know you'll find that surprising, but we will, because it costs nothing. Okay? That's a stunning thing to think about. Oh my God, you could make more than Barrick? Because nobody knows what the hell's going on down there. And they haven't computed it and worked with it. And what if we keep finding, what if instead of finding 1.2, we find 2.4 million ounces in a part of the deposit? Part of the deposit. And by the way, this deposit, we got, I always imagine I'm down below, it's a level of 4,100 meters, okay? And I got 9 kilometers of open pits above me. And all of a sudden you get down to about 4,100 feet and the grade explodes. Explodes. We used to mine 4 to 6 grams. Now we mine 20 grams, okay? And it starts at a level that some geologist, Quinton Hanning, who I sent down there in May of last year, said, Eric, you get below this level and all of a sudden it explodes for some geologic reason that I don't have to understand, okay? I don't know what the hell the reason is, but he sort of explained, well, you know, the weight of the earth above and the pressure from the mantle below and everything just stayed right there for a long time and then gold, and it all precipitated right there, metamorphized or whatever the hell the word is. And he said, Eric, you're going to find a lot of that high-grade gold. Now, can you imagine if we find a lot of high-grade gold below 9 kilometers of strike length? How much gold might be there? Just imagine. And you don't have to pay for it. You're not paying for it. You think that goddamn stock recognizes any of that stuff? No, it doesn't. Doesn't recognize it for a second. Probably the cheapest stock around based on just today's cash flow. You know, nobody pays for the exploration success. How the hell did I get on this topic? Okay. Oh yeah, reality versus conservatism. Now, as an investor, Like, for example, let's take me looking at Kirkland Lake and or Fosterville. And by the way, when I think about it now, it was a big mistake of mine to suggest that Kirkland should take over Newmarket. I would have been better off keeping my 17% of Newmarket, thank you very much, instead of my 10% of Kirkland. Because it's Newmarket where the action is, okay? So it was a mistake. And of course, when I think back about it, one, the CEO who's no longer there didn't get it. Maybe some of the people at the mine like to be conservative. And of course, they're all reporting back to their bosses in Vancouver who started Newmarket, and they're telling them, we're going to produce 140 to 145,000 ounces this year. Why don't we merge with Kirkland, who's got things going on? Because they didn't recognize that they had things going on because nobody told them. Conservatism versus reality. It killed them. The opportunity they gave up. Selling that thing to us was a joke. That should have been, and I can be criticized too, you know, because I could have ended up with higher percentage of that. Okay. Oh yeah. So one of the things that I say to people at, for example, Fosterville, the theme of mine, see the future early. See it early. I don't want you to tell me 3 years from now when I go down there, oh, we're going to produce 500,000 ounces this year. I want to hear you say it today. I'm an investor. I can't just keep waiting for the thing to march higher and higher and higher, and all the while I didn't know where we were going to get to. I want to know where we're going to get to today. Best bet. What's the best bet? What are we going to do? So even, you people who are issuers here, even though everyone wants you to be conservative, you also have to be realistic in your explanations of where you think you could be. And don't worry about it. I mean, I could get up here and blab all I want about, gee, Fosterville could produce 2 million ounces. I mean, you're not going to be criticized because it's just a hypothetical example, okay? It's hypothetical. But realistic nonetheless. I mean, it could happen. And I want to know about this as soon as I can figure it out. So, and it could be bigger. What if the 9 kilometers all has this stuff in it? The hell are we going to be producing in 3 years? Who knows? It'll be big. So you want to see the future early, and as an investor, particularly as an investor. Okay. Now, one of the things that I contrast analysts and investors, and to those of you who are issuers, we all keep hearing, well, we got to get some analysts to do whatever. No, you don't. You got to get some investors to invest. You need investors to invest. They're the ones with the money. The analyst is the guy who's going to lowball whatever the hell you think you're really going to do. And you're going to tell everybody, if he thinks he's going to do X, he'll use 0.6X and rate it a buy. It's a buy. It's an understated buy. What you want to know, I want to know the whole shebang here, right? I don't want you to, your stupid conservative estimate. I'm an investor. I'm not some guy reading the goddamn research report. Okay, I better start talking about some, what am I going to do? Well, I'm going to try to find some time to talk about some of these stocks that I'm involved with, and I'm almost running out of time. The more important things are, some people say, well, what are your sources? Well, all my sources are always inside sources. I trade on inside information every day, right? It's exactly what I do, because I love the idea of going to jail. Okay? And I'm going to invest $2 million in some stupid little company and possibly go to jail? Not. Okay? I don't know how many times I have to say to management, don't tell me anything that I shouldn't know. I don't want you to talk to me, okay? Because then I'm vulnerable. So how do you find out what's going on? First of all, you listen. You listen carefully. Now, for example, Sean said to me 2 nights ago, yeah, these guys have, I don't know whether it's 77 feet or 77 meters of, what the hell did he say? 3% copper and so many grams of gold. And I heard, that's an interesting one. I better follow up on that, okay? Now it's back here, okay, I haven't done it yet. But you listen, you hear it, okay? The other thing you have to do is you have to read things carefully, critically. Okay, so I'm reading the Wall Street Journal in June of 2000. And there's an article that's about that long, about 3 paragraphs, okay? And a lady whose name was Amy Butte, and I think she was with Lehman Brothers, and she was down on the brokerage companies because of all the underwritings of what were called CLECs at the time, communication companies, WorldCom and shit like that. They'd done all these underwritings, and she thought they would be vulnerable to some litigation for dealing in junk because all these companies were going broke, okay? I'm reading the article. I live in Canada. They're going broke. These are guys that buy telephony equipment? Well, who provides it to them? Nortel. Nortel. This is June of 2000, for God's sake. Nortel's still at its high. It's at its high. Well, needless to say, I did strap on some Nortel shorts. Nortel doesn't even exist anymore, does it? Like, it's not a stock anymore. They went totally bankrupt. So it went from the largest stock in the TSX, it had 30% of the whole freaking index, to 0. Oh, what a wonderful, I mean, it's wonderful to be associated with a call like that. Everybody friggin' loved it. And it was a piece of shit. And you could read about it in the Wall Street Journal. All you had to do was connect the dots. Okay. So for those who are investors now, like I have found the chat lines to be incredibly valuable. And I would say to anyone here, sometimes when I read a book, I say, man, if I could get one thing out of this book, I'm going to be a happy guy, okay? And I use the same approach with the chat lines. I'm reading the shit that the guys are putting out, and this guy's calling that guy an asshole, and this guy, well, you're a scammer, blah, blah, blah. But every now and then there's a real guy on there, okay, who's got something real that he has to say. And sometimes you kind of get the sense that this guy knows what the hell he's talking about. And he might even be giving you some inside information, but it's in the public domain. Thank you very much, sir. And you use it, okay? And I had a situation today. I'm reading a chat line, and some guy's saying of Garibaldi that hole 2 has 120 meters. Well, hole 2 has never even been announced. Again, how the hell does he know it's got 120 meters? The hell does he know? But he says it's got 120 meters of nickel sulfides, okay? Okay. And he says, and hole 4 went right into the massive sulfides. Holy shit. Where'd this guy get this stuff? But it gives you a little sense of, okay, I know I'm not supposed to know this, but I can't, I'm just reading the damn thing, you know? And I'll tell you the story of Garibaldi because I had, a lot of things that happen to me are fortuitous, okay? I've helped people with investments and so on. So this company, Garibaldi, when I ran Sprott, I would always support his issues. And he phones me up one day about 3 or 4 months ago and says, Eric, I'm trying to do this $500,000 issue. I'm open on $117,000 worth. Would you take it? Yeah, sure. What's the price? 15 cents. I said, where's the stock trading? He says, 35. Whoa, geez. It's a double already, and I got the warrant to triple. Okay. As it turned out, the TSX turned that trade down. Okay, they turned it down. Fine. But I'm thinking, well, why would the stock be at 35 cents? Nobody's even heard the name Garibaldi. Okay, so I go to the website. And I see the postings. There are 20 postings an hour. I think, this thing hasn't had 20 postings all friggin' year. And now they're posting 20 an hour? I'm getting into this. And I start getting into it. And I don't know if there's a guy who uses the moniker Urbani here, but he was very helpful, by the way. If you're here, thank you. But you get smart people talking about this stuff. You get nickel copper guys. I'm not a nickel copper guy, I'm sorry. I'm a gold silver guy. Saying it's going to be another Voisey's Bay except bigger, okay? And then now I'm in it, okay, because this stock has probably got a market cap of 20 million. Voisey's Bay sold for 4.5 billion. Well, let me think now. Oh, that's 200 times of my money. And it's bigger than Voisey's Bay. Oh, geez, maybe it's 400 times of my money. I wonder if I should get more involved in this. Everyone's saying it's great. They've already found it, and the stock's done nothing. Well, Eric does get involved in it. And now Eric owns whatever, 17% of the company, and I've put some money in. I've probably invested, I don't know, between 5 and 10 million in it. But I think they got the big one, okay? And I'm using other people's analysis to say that. It's not my analysis, it's other people. and the information that's available on their website, and the interviews, and the this and the that, and well, what's the most likely thing here? Anyway, so that you have to learn to use what is now a great resource. Okay, the internet is truly a great resource. Okay, so I've already told you about Garibaldi. I should talk about Novo now. We talked about Kirkland a little, so I'll just end on Novo. So Novo, same story. Quinton Hanning, I supported him when he ran Gold Canyon, and other little things that he has, Irving Resources and NV Gold, and the guys would call me, we're trying to raise some money, and so yes, I had put some money into Novo when it was 65 cents, and I'd use Quinton's services trying to understand Fosterville, where he's incredibly helpful to me, and Kirkland. So we'd meet to talk about Fosterville. It was kind of funny because I'd have Tony McCooch and Greg Gibson, myself, and Quinton at lunch. And we always say, well, let's see who does the best promotion. Who's got the best story? And Quinton would always win. And of course, we thought we were pretty good promoters too. Like we could tell a good story, okay? But Quinton was way better than us. So there was an occasion where Quinton's there, said, geez, we're on to something down in Australia here where it could be which waters ran like. And of course, the Northwestern Australia and South Africa were attached. The Cap Val, Creighton, and the Pilbara were attached 3 billion years ago. You all remember that, right? Anyway, and the theory of which waters ran, which has only recently been espoused, is that which waters ran was a precipitation of gold out of seawater. Precipitation. That once the water got oxygenated, the gold that was in solution in acidic water precipitated. And that's why you have this huge 350 kilometer by 150 kilometer which waters ran gold basin. Precipitation. Okay, you don't have to believe it. But there's lots of things to read now, all the time, interviews all on the internet, testing out whether the theory is likely to be correct. And that's Quinton's theory, that the Pilbara was a precipitation event, and there's lots of reasons to believe that it's true, and we just keep knocking them off one after another. The reasons to believe it's a precipitation event, okay? And the most recent one, well, first of all, they have this strike that's 8 kilometers where the guys go with metal detectors and just pull gold out of the ground, including me. Okay? Eric here, back up there. Oh, yeah. Okay, now I'm supposed to go, whoa! Which I did. Wow, there's a nugget there. And of course, I'd already seen the video, okay? So I knew there'd be a nugget there, even though they just chopped it up and there was, wow. Okay. And then, so, and you can see all these holes on the surface. I was down there where guys had found nuggets right on surface, okay? Going down 1 and 2 inches. Then about 2 weeks ago, a guy finds the same watermelon seed nuggets 110 kilometers away. Well, thank you very much. Now we got 150 kilometers of strike length. Sounds like an ocean to me. So we had a long strike length, pretty well. Now we start going down dip. They announced about 2 or 3 days ago that they have gone out about 400 meters down dip. They drilled either 11 or 12 holes, and every one of them hit Conglomerate from 4 to 14 meters of thickness. It's not assayed yet. There's only one assay. Well, there's one assay that was on a mini bulk sample. It had over 2 ounces in it. Okay. Now I'm not falling in love with 2 ounces because this starts getting scary if it has ever had something like that. But I do know that there was a company that is rumored to have taken a sample, and that the forget nuggets, the micro gold ran 17 grams. The micro gold in the Novo assay was 11 grams. So now you've almost got 1/3 of an ounce just in the micro gold, forget the nuggets, okay? So now we go down dip, and we're already out 400 meters, and we have Conglomerate. And we know that 60 kilometers away, somebody drilled a hole in the 1980s that at 1,756 meters found 1 meter of Conglomerate being the important word, that ran 11 grams of gold. And down at 2,200 in the same hole, they had 40 to 50 meters of Conglomerate that was never assayed. But it's Conglomerate. Like, how the hell does a Conglomerate get down there? It's the bottom of a sea, right? Anyway, it would appear to me that there's one thing missing in the whole story, and that's grade. And I can only tell you that if they, let's say they came out and the first assets were a third of an ounce, guys, do you know how much this stock's gonna go up? You wanna start doing the math here? Of this many kilometers of strike, that many kilometers of dip, that thickness of gold, that grade, that's, turn it into tons. Oh my God. It starts with a B, okay? Don't kid yourself, it starts with a B. Just like the Witwatersrand is a B, was a B, 1.6 B. In fact, the Witwatersrand is 2.7 B. They know that, they just can't get to it because it's so low and so thin. Witwatersrand was about 30 centimeters thick, 1.6 B, 30 centimeters. We got 4 to 12, or 4 to 14. So it could be good. I probably said enough. Let's close it off with, I do believe that opportunity abounds, okay? That there's lots of things that if you do your own work, you keep your eyes and ears open, you can find opportunities. And for those of you who are issuers, find ways to explain how big something is. My favorite question, well, how big can this get? Okay, I do know that management can lie about that, okay? I see more big deposits than there are big deposits. Anyway, I think lots of opportunity abounds. I think the market's kind of going our way for this cycle, and it should be exciting going forward, both for the investors and the issuers. Now, with that said, I have exactly 5 minutes to take questions if anybody has a particular question. Yes, sir. Okay, would I buy Novo or Artemis? Well, I've been a buyer of Novo recently at these prices, okay? I have. I think that's the thing to buy. Now, I am actually active in terms of trying to buy some things in Australia that literally I'm out there with offers because I think they'll all be quite large. But when I asked Quinton, I said, well, what percent of this thing do you think you have? And I thought he might say 50 to 60% of the whole, the basin. He said 90. Well, if he's got 90, you don't need to go anywhere else. I'm not saying just because he said it, it's true, but that's what he said. Okay, so somebody else? Yes, sir, back at the back.
I mentioned it earlier, but why do you think that the ore body that Garibaldi has extends over to Kirkland and Metalis? And what do you think about Garibaldi?
Okay. Well, of course, I'm just reading what other people say, okay? And they say it's a series of pulses. So you got this anomaly D, C, B, and A, which I think are all separate ore bodies. And apparently, and they're up here, and then Metalis is south of it. And it's been suggested that they have pulses too, down in the Metalis property. And as you know, they're drilling. They probably stopped drilling now. But we'll see. I mean, I'm just speculating. It was probably a 30 or 40 million market cap when I bought that private placement. And, but I think they're thinking they might. In fact, I've heard the word now, Norilsk, to compare this discovery to, not Voisey's Bay. Norilsk is better than Voisey's Bay. I can't tell you by what factor, but that's what I read now. Norilsk Lake. Dave, you had a question?
Yeah, so Eric, you mentioned the coin offerings and cryptocurrencies, and obviously when somebody doesn't trust the US dollar, which is typically the gold and silver investment, capital flows in that direction. What's your thought on capital that's flowing into the coin offerings and cryptocurrencies? How is that going to affect, maybe in the short term, maybe in the longer term, how is that going to affect the price of gold and silver and the capital flowing into the gold and silver market versus the cryptocurrency?
Sure. Well, as I've said, I don't believe there should be 1,000 coins out there. And yes, it has taken a lot of money away, and speculative money. But that's happening. We may have peaked out on that already. Like maybe the initial coin offerings already peaked out. I was reading in Zero Hedge today that some coin offering, I forget the name of it, just sort of fell apart overnight. But it could be that, maybe you've tapped that resource and it's not getting any bigger, therefore it's not going to have any further negative effect, but it's negative for sure. I mean, but probably particularly more from the mining stocks, which do give you that much greater return than just gold or silver. So and everyone thinks they're getting this greater return in Bitcoin, well, that's probably going to take away from the junior mining sector more than just gold per se. So, but I think it will end. And I think the money ultimately, I think it will return to gold and silver. That would be my answer. Maybe one last question here if somebody's got a question. Anybody else? Yes, sir.
Have you looked at Klondike?
I'm in Klondike. What can I tell you about Klondike? Somebody said I should invest in Klondike. And I said, what's the reason? Well, they're going to find all sorts of gold. How much gold are they going to find? Oh, they're going to buy 20 million now. Oh, okay. What's the market cap? Okay, I'll buy some. I'll tell you why I bought into Klondike. Because Frank from Vancouver, I'm forgetting his name right now. Wiesma, Frank from Vancouver. Justra, thank you. You see why she's here, right? Because he was a big owner, but he was buying it in the market. And when you're a big owner and you're buying it in the market, something's happening. Something's happening. So I suspect that something's happening there. Like they probably have some good drill results coming up, and maybe they've got the. So I own it. I probably own over 10%. I don't even know. But I'm hopeful.
It's quite risky, right, for somebody to risky.
Oh, yeah. Well, the question was, if an owner buys in the open market, wouldn't it be risky if it's on inside information? Well, that's absolutely true if it's just based on inside information. You know, if you just knew that something specifically had happened that makes the stock more valuable that's not in the public domain, yes, that's a problem. But if, you know, you're sitting down there listening to the geologist and says, oh my God, we think we've found the mother lode here because, you know, we have this result that we've announced already, but we think it's going to go here. And, you know, you're buying into the dream, right? But the dream obviously has more substance than just a dream. So that's what, you know, it's almost like me looking at these websites and reading about Novo and reading about Garibaldi and MTS and stuff like that. And you're saying, okay, this sounds like some pretty good information. I think I'll give it a whirl. And somebody who knows a little more than I know, typically. So, okay, look, let me check the time. Oh, it's 10:02. I'm over my time. Thank you all very much.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?